This week, UK property market. Are house prices about to take off? What's on the horizon, do we think? Now, according to the Daily Telegraph, in 2025, everyone was expecting a housing crash, i.e. this year going forward. Instead, prices are climbing. Landlords are utilising fully their SPV company structures. Asterisk, see more at the end for what that's all about. And then we can tell you all about what they're doing and how successful they're being. And the rental market is moving fast. There's still 13 applicants per new let. Is it changing? Are we at some different part of the cycle than we've been at before, the 18-year cycle? And are you getting it right? Are you doing the right sort of thing? So let's just look at the historical context. Historical context was 2020, 2022. We had interest rates near zero. Everyone goes on about it all the time. I find it pretty boring, to be honest, because when I was a kid, there were 14%. It was very easy in that period, 2020 and 2022, to get cheap borrowing, and people got used to it. There was a demand-supply gap. Surge in demand, restricted housing supply, more noticeable because loans were cheap and everyone was out there trying to do it. Result, house prices surged and it hit £273,000 per unit across the UK. Now, what happened after that, subsequent to it? Well, this is an unknown fact. There was actually a housing crash at that time, but it was a hidden crash. Why was that? Because interest rates climbed to 5.25%, squeezing affordability. Suddenly people couldn't afford to get loans when they'd gone up from 0.5 to 5.25. There was an expected crash, but in reality what happened? House prices only dipped by 5%, nominal prices. Real prices, however, adjusted for inflation, actually fell by 15%, the largest real terms decline since 2008. So we had that crash. So the market has already corrected, but just not for people out there looking, people in the press weren't publicising it. So what happened after that? 2024, there has been a crash in 2023. Affordability has rebalanced. We're back to prices at from a different age. 2024, the Labour government comes in, political shift raises, investor concerns. What's going to happen? Is the end of the world is nigh? Price growth, despite uncertainty, prices went up by 4.8%. The current average now is over 300,000 according to Halifax. Drivers, what are they? Buyers adapting to higher rates. Structural shortages persist, high immigration, underbuilding. Rents continue rising, supported by demand for buy-to-let because they're not building houses for people to rent out. And economic stability, low unemployment, rising wages. And that's a big thing. If you had inflation that's dropped by 15% and you've got wages that have gone up by 12%, that's a 27% change in affordability. So in reality, that's what we're seeing. So now what is the outlook going forward? Is it a boom or is it a bust? As I just mentioned, current prices in real terms match 2013 and 2003. They're not overvalued. People are saying all the time that they are, but it's not the case. So therefore, the crash risk is low. Historically, crashes follow rapid, unsustainable growth, and we haven't had that. What's the forecast then? 3 to 4% annual growth, broadly tracking inflation. It's not going to shoot the lights out, but you're looking at something like 15 to 20% growth by 2029. On top of that, we have got a lack of supply. In 2024, the government only had 200,000 planning approvals. It's supposed to be at 350. That's 150 below target. The House Builders Federation expects the government to do 50% of their 5-year target. So not 3.5 million, but 1.75 million. And these mostly be houses for the mid-wealthy or even the well-off, because they're luxury properties in places like city centres. They're not properties for the social buyers, for social builders or first-timers, unless they have a change of policy that is going to just exacerbate the housing crisis. So are we going to have a boom or a bust? I think it'll be just steady as it goes, 20% over the next 5 years, that sort of thing. So that's a pretty good buying opportunity. Now, mentioned earlier on about buy-to-let companies. Buy-to-let companies are now the biggest business sector in the UK. There's been a surge of company landlords. They now outnumber fast food outlets, hairdressers, and other small businesses. And why? Because tax efficiency. Companies can still deduct mortgage interest from tax. So MIRAS, for those who remember that, mortgage interest relief at source. What's the historical growth patterns? 2016, there was 93,000 buy-to-let companies in total. By 2024, it was 400,000. 2024 alone, 61,000 new ones were created, a 23% rise in the previous year, and they were holding 680,000 rental properties. What's driving the shift? As I said, MIRAS. You can still do that. You have other benefits in there. It's very inheritance tax friendly. i.e. you have 4 share classes. You can give different individuals different share classes depending on what you want to try and achieve. So in reality, you can do a potentially exempt transfer. As long as you live 7 years, your children can be shareholders in there. So it's very tax efficient. The tax you do pay after claiming your MIRAS is corporation tax, which is at 19%. So you only pay that on a percentage of your rent. So that's very good. You can't transfer a new house, an existing house into it, because you pay stamp duty again. So it's promoting it for new entrants to go into the market and do that. And we're seeing a lot of it. I'd say 75% of our new buyers are going in through companies. Okay, and then the important thing, when you sell the company on, there's no stamp duty for the secondary purchaser because it's a share sale, not a property sale. So there we have it, why it's been driven, why SPVs are driving forward, what's going to go on in the UK market over the next 5 years or so. And it's looking pretty positive, I think, personally. Now, some questions. Okay, we've got Bondi, I can't read that one, Bondi's 5346. Probably looking good in comparison to recent debacle in the share market. Hey, you're not joking. Hopefully the UK government will get their act together. Personally, I doubt it. And assets will continue to increase drastically, i.e. housing. That's exactly what we're talking about here. There's no way they'll hit their target of 3.5 million properties. And if they do, at least half of those have got to be social housing, which won't be available in the rental market, which means that your buy-to-let market is still going up. You know, as Mark Twain said, they're not making land anymore, and the UK is short of land. So it's a good buying opportunity. I was chatting to someone the other day about Australia, and he said, why is Australia a good market? Well, if you look at Sydney, it's the same Mark Twain theory. You've got the Southern Highlands, you've got the national park, and you've got the river holding in the land that can be built on. The Australians are very much NIMBY-ish, like the UK people are. You know, they're not in my backyard. They don't want to have the Beijing approach of building high-rises. They want the Barcelona approach of building low-rises. So that's what drives markets, and that's what will drive the market in the UK and in other developed locations. Steamhammer 2K, good name. We need to stop demand until we have enough houses. Immigration will be the first thing to look at. What else would you like to look at? Steamhammer 2K. Perhaps deciding who's allowed to buy a house and who isn't. Who is officially able to buy a house. You know, you can't do that. We're a free market economy. Immigration has built many of the great economies worldwide. You know, look at the US, look at Germany until they had the recent problems. You know, these are places that have been built on the backs of immigrants coming in and doing the jobs. The UK, we had immigrants coming across from Belgium. That's where linen came from. The linen quarter in Nottingham was immigrants who came over, who were persecuted by I think it was the Huguenots. They were persecuted by the Catholic Church. You can't stop natural forces. Okay, perhaps illegal immigration, which I think a tiny part of it, yes, fair enough. And the fact the government are paying 25 billion a year to put people up in guest houses and hotels is shocking. So that should be controlled a lot better. But you're right, social housing needs to be done. Affordable housing needs to be built. We've lost out there. Margaret Thatcher at the time seemed to have done a good thing, but in reality, she hasn't. Finally, Res Garcliv 5104. Would you say the intentionally making planning regulations more difficult so that housing prices stay high as it benefits people in power and all the UK lobbies who own half the wealth in the real estate? Possibly. Could be the case. I mean, as we said before, it started in 1947 with the Town and Country Planning Act, and that started off the NIMBYism. As you've seen this week, you know, around the cricket pitch in Warwickshire, you know, they couldn't build houses there in case someone's front window got hit by a cricket ball. That'd be quite funny, I think, myself. Okay, not if you were hit by it and knocked out. But yes, I think planning regulations are too old-fashioned. They're too much red tape, and they need to be cut. If you compare it to, again, and I can only talk about Australia because I know well, Australia, things get done and they're done quickly because the planning regs are a lot simpler. So yes, thanks, Res Garcliv 5104. That's good. So thank you very much. Hope you enjoyed this market wrap. Do forward it on to your mum, your dad, your sister, anyone else you might think that's interested, and do download our book, 10 Steps. It's a good read. Everyone tells me. Cheerio. Bye-bye.